Hello friends, welcome to our channel Easy Shorts of Learning. Today's video is about issue of shares. In this video we understand meaning of shares, types of shares and what journal entries company do at the time of issue of shares and what are the types of share subscriptions. So friends, if you have not yet subscribed my channel, please subscribe my channel, and if you have any query related to this topic, please write me in the comment box. Our first topic is meaning of share. Now, share is a part of capital of the company. For example, a person starts a business and introduce 50 lakh rupees as capital. Now, after 4 to 5 years, he see that his company is doing good and he wants more money for the growth and expansion of the company. So, he divides his total capital into a small portion of small part of 10 each. Now this small part of capital is known as share, and he divides his total capital into 5 lakh shares, and out of this 5 lakh shares he issue 3 lakh shares to the public and invite public to participate in the ownership of the company. Now the company has three options for issue of shares. The company may issue shares at par, at premium or at discount. When company issue shares at par, it means if the face value is rupees 10 each, then the issued price is also rupees 10. But if the issued price is more than the face value, then we say that the company issue shares at premium. Here the issued price is 15, so the premium amount is 5 rupees, and if the issued price is less than the face value, then we say that company issue shares at discount. So here the discount amount is rupees 1. But according to section 53(1) of Companies Act 2013, shares issued at discount is prohibited by the company. Only in case of sweat equity shares, that is, shares issued to employees and directors of the company, may issue at discount, but now the company is not allowed to issue shares at discount. Our next topic is related with types of shares. Generally, there are two types of shares. One is equity share. They are the owners of the company and have voting rights and may participate in the decision making of the company. But preference shareholders do not possess the voting right but have preferential right in payment of dividend, that is the part of profit that is distributed to the shareholders. So they receive dividend first before equity shares, and if any amount remains, then dividend distributed to the equity shareholders. And when the company goes into liquidation or insolvency, then preference shareholders have first preference before equity shares for repayment of capital, and if any amount remains, then equity shareholders will also get the capital back. Our next topic is division of issued price. Now the company decided the issued price of a share is 100 rupees. Now the company has two options whether to receive this 100 rupees at one time at the time of filling of application by the shareholder, or he may receive this issued price in installments. So here he decided to collect this issued price in three installment. First, at the time of filling of application by the shareholder, that is application money of rupees 40. Second installment is at the time of allotment of shares rupees 50, and after some time first and final call of rupees 10 each. So company have both the options whether to take issued price at one time or take it in installments. Our next topic is rules of journal entries. Now first we discuss the rules, then we take one by one our accounting entries related with issue of shares. Our first rule is increase in assets are always debited and decrease in assets are credited. So we take one example. When company receives application money, allotment money and call money, then the company's one asset, that is the bank balance, is increased, so increase in asset is debited. So here when the company receives money, then bank account is debit, and when the company gives back the money, then bank account is credited or bank balance is reduced. Now our next rule is increase in capital and liability is credited and decrease in capital and liability is debited. So for example, Here we take the example of share capital. When any company issues shares, then the share capital is increased. So share capital account is credited, and at the time of forfeiture or cancellation of shares, then share capital account is debited. So these are the rules related with general entries. Now we take one by one all accounting entries related with issue of shares. When company invite public to fill the application and purchase the shares of his company, then at the time of filling of application money, company receives application money. So here our entry is bank account debit to share application account, because bank account is increased due to receive of application money, and it is an asset, and increase in asset is debited. Now when company receives application, then share application account is credited, and when share application amount is transferred to share capital account, then it is debited and share capital account is credited. So at the time of transfer of application money to share capital account, our entry is share application account debit to share capital account. Now for all other installments, first we due the installment, then we receive the installment. So when we due our installment, then that installment is debited and share capital account is credited. So at the time of allotment money due, our entry is share allotment account debit to share capital account. When first call is due, our entry is share first call account debit to share capital account. And when our last installment is due, our entry is share final call account debit to share capital account. Now when we receive the installments, then bank account is debited and installment is credited. So when we receive allotment money, our entry is bank account debit to share allotment account. At the time of receive of first call money, bank account debit to share first call account, and our last installment when we receive, our entry is bank account debit to share final call account. So entries are very simple. First entry is always related with receive of application money, then transfer of application money to share capital account, and other entries related with our other installments. First installment is allotment. So first we due the allotment, and our entry is share allotment to share capital, and when we receive the allotment, then bank account is debited and installment is credited. That here the installment is share allotment account. Next, first call due, then our next entry is first call receive, second and next entry is final call due, and our last entry is final call received. So these are the entries related with issue of shares. Now our last topic is share subscriptions. When company issue shares and public apply to purchase these shares, this is known as share subscription. So but the minimum subscription as per Security Exchange Board of India is 90% of net issued amount. It means if the minimum subscription must not there, then the company has to return back the money that they receive from their shareholders. So there are three conditions that company will face here. First is full subscription, where if the company offer 1 lakh shares and public purchased or subscribed 1 lakh shares, then this is known as full subscription, and all entries, whether they are related with application, allotment and call money, they all done with 1 lakh shares. Our next condition is under subscription. Here if the company offer 1 lakh shares and public apply for only 90,000 shares, so our all general entries will be done with 90,000 shares. And our last condition is over subscription, when the company offer 1 lakh shares and public apply for more than 1 lakh shares. Here public apply or purchase request for 1,50,000 shares. So application money received entry will be done with 1,50,000 shares in case of oversubscription, but all other entries will be done with 1 lakh shares, because company will issue only 1 lakh shares, can issue only 1 lakh shares. So friends, in this video, first we understand meaning of share, then what are the types of shares, what general entries company do at the time of issue of shares, and what are the types of share subscriptions. Friends, if you like this video, please share this video and subscribe the channel. Thank you so much. Have a nice day.